This is the FFR Trading Market Minute, and this is a 3-minute candlestick chart of the SPY. Why am I on a 3-minute chart here for the Market Minute? Well, I just wanted to show you today we happen to have what's called an outside gap up. So if we look back here, you can see here was the open from yesterday and the close, and you can see this morning we opened above, or we gapped up above yesterday's high, which is right near the close here. That's what we call an outside gap up. The tendency is, if you go to a 3-minute chart like we're on here, that first 3-minute candle that prints, right, once that breaks to the upside, which it did the second 3-minute period here, the tendency is the market is going to run about twice the size of this initial 3-minute candle to the upside. And you can see I set the target here, or the risk reward here off that first 3-minute candle is a 2-to-1 reward to risk here. So it just hit that target this morning. That was my upside target for today, which is Thursday, July 3rd, right ahead of the holiday here. All right, but let's take a look at how we got here. So I'm back to a daily chart here. And the reason I was bullish on the market after the crash here, once the market had retraced more than 50% of that crash, in this case 60% of the crash was retraced, it's almost 0% chance that we would come back down and retest the lows, right? The lows back in April here. Much higher probability that the market would go on to make new all-time highs, which obviously we did see. That began on Friday, the 27th of June. But a couple weeks ago, I pointed out on the monthly chart. So if I go to the monthly chart here, what we had on the monthly chart is the S&P was above its 20-period moving average on the monthly chart, and I pointed out that the RSI had crossed above its moving average, the red line. So the black line crossed the red line this month right here, which was May. And I said once the high gets taken out, which it did in June, that this should get some follow through, right? Just the tendency, and this works on any time frame. All right, so once that RSI crossed above its moving average with the S&P above its 20-period moving average here, once that high broke in May, that high broke in June, and we're off to the races here, new all-time highs. So that's kind of how we got here. Where are we headed? Well, we still have some room to the upside, despite we hit the daily target today. We do still have room to the upside. The RSI is not overbought yet, right? You can see it can get overbought above 95, right, which it did this period here, and you got a month of pullback. Same here. The RSI was above 95, and the following month you got pullback there, right? So we have some room to still move this month to the upside. If we go down to the daily chart, all right, you can see clearly on the daily chart, we are, overextended here on the RSI. We are, overbought. We have some gaps below the market to fill now. So any pullbacks, expect a potential gap fill back here. At least about 80% of the time the market will fill those gaps on the daily chart. But a couple things I would be looking for on the daily chart. One is if we get some divergence. So if we continue to make higher highs, but the RSI ends up making lower highs, that would tell us that a pullback should start to commence. The other thing that I would look for is if the RSI crosses back below its moving average, the red line here, and whatever day that happens, whatever the low ends up being that day, if that low gets taken out, then we should get a move to the downside, some pullback here. But like I said, we still have some upside potential as far as the monthly chart goes, but we are overextended here on the daily chart. All right, we'll see how that plays out. So definitely, protect your downside here as the market makes new all-time highs. Move your stops up and trail, and we'll see what we get, after the holiday clears out here. On the economic calendar next week, Wednesday, we've got FOMC minutes. That'll be at 2 o'clock Eastern. Thursday's initial jobless claims, and Friday, the monthly budget statement. Hope that helps. Have a great 4th of July holiday. We'll see you back next week in the FFR Trading Market Minute.